Welcome back to the channel. A lot to unpack this week, a lot to talk about, especially around first-time home buyers, move-up buyers. I wanted to take an opportunity to go through this for our viewers, for our clients. Lots of questions, a lot of mistakes that are happening, a lot of things that are being overlooked, and some of these mistakes can be extremely costly and create undue stress and pressure on the sellers and obviously on the buyers, depending on what you are looking to do. If you're a first-time home buyer, move-up buyer, and you have a sale that you need or depending on in order to make that purchase. We'll talk about that and more this week. So right now, we understand that Donald Trump has been sworn in as the 47th president. We definitely have this 25% tariff scare coming across as early as February. We'll see exactly what plays out there. We also have the Bank of Canada meeting coming up on the 29th of January, and a lot of Canadians are waiting to see exactly what ends up happening with the Bank of Canada and their policy rate decision. But all that has not deterred a lot of buyers that have been on the sidelines and those individuals that we're working with day in and day out to help them understand their pre-approval, what they're able to do, what they're not able to do, depending on their situation. Now, one thing that we've noticed across the board is a lot of our clients, yes, they're reaching out for pre-approvals. A lot of clients that we're talking to as referrals, they have somewhat of a pre-approval. And although a pre-approval does just specify a rate and a mortgage amount, it all depends on what is happening behind the scenes. Not every single pre-approval or rate hold is equal. And that is a very important conversation because are you providing the right documentation to the person that's reviewing that pre-approval? Have they taken the opportunity to look at the income, especially now that we have entered into 2025? And as we embark on 2025, that means that most individuals that are salary or hourly are going to be getting their T4 for the year of 2024. And depending on that income, if you're hourly, then how does the lender look at that income? Are they looking at the last pay stub from December of 2024 to understand your annualized year to date? And these are some super important things as we now enter this little turning point before T4s are issued and what you are using as income. Now, that's one thing that we definitely see happening right now, especially if the income is lower. If it's higher, it's obviously better, but if it is lower, it can pose a problem, especially for buyers that are looking to maximize on their purchasing power, looking to maximize the amount of house that they can purchase, depending on obviously their down payment. We know that we have these rules, these changes that came into effect back in December, allowing individuals to basically now take on a 30-year amortization if you are a first-time home buyer. You cannot take on a 30-year amortization if you are an existing homeowner that's sold and looking to buy again under an insured program with less than 20% down. You have to take that 25-year. You've also been able to, if you're a first-time home buyer or not a first-time home buyer, qualify to go up to 1.5 million as an insured purchase amount. So ultimately, there's a little bit of confusion here. What's happening? A lot of people getting information mixed up. Once again, 30-year amortization is reserved only for individuals that have not purchased a home or owned a home in Canada for the last 4 years that have gone through a marital breakup. And understanding those rules helps you to understand your qualification. Trust me when I say this, we see all kinds of funny stuff and all kinds of bad information. Now, ultimately, a pre-approval obviously has to look at other components as well. If you are an existing home owner and you're looking to make that move, whether it be for a larger home with more bedrooms, more space, or you're looking to right size downwards, understanding your limitations, understanding your requirements. If you have a mortgage on the property, what does your income look like? What is the deposit with offer going to be? A lot of times we're talking to first-time home buyers or existing homeowners. A lot of the first-time home buyers understand that when you have a deposit with offer, when you're purchasing that home, you've gone through the whole negotiation, your offer's been accepted, how much money are you putting down? Are those funds available to you? Where are those funds coming from? And that also applies to individuals that are looking to make that move either up or down. A lot of times we're talking to these clients, they've taken that money, they've paid down their mortgage, they've used all their additional cash reserves to help pay down the mortgage. And then they come to the point where they decide that, hey, we need to make a move. Maybe they have a little bit of money put aside, they don't have enough to make an aggressive offer. Now, I am not a realtor. I'm not a real estate professional. I work on the finance side, but we get this question posed to us very often. Anthony, what should my deposit with offer look like? And ultimately, it's about how much money you have access to. If you have the ability to, borrow from your line of credit, that's a security against your home that will get paid out on the sale of your home. Obviously, making that deposit with offer as attractive as possible, meaning the more you put down, ultimately, the better that offer looks to the seller of that home, and consulting with your real estate professional about what it would be required depending on your location. If you're buying in Toronto, it would be potentially one thing. If you're competing in multiple offers, it'd be one thing. If you're buying on the outskirts, with condition of financing, maybe you can get away with a less of a deposit with that offer. Now, the other super important thing to really consider in this process is, are you looking to buy the home before selling your existing home? Or are you going to sell your home first and then buy? I mean, this is really an important question, and one that has a lot of conversations, especially when we're talking to our clients and having that conversation with the realtor. I mean, looking at the market dynamics, when is this transaction going to happen? And each case, each individual situation is unique. So, I mean, we're just having a conversation about what we see. And obviously, for clients that are looking to stretch that budget, purchase the maximum amount of home they can in this market, and depending on how much equity, how much reserve funds are left over in that home that they currently own and are selling, putting that towards the down payment, how much does that look like? How much can you qualify for, right? Because when we go through this pre-approval process to help our clients make that leap into the next home, right, going through the property ladder, it's important to get an opinion of value, right? So this is where you're sort of working with your real estate professional and hand, and they're going to give you a opinion of value of what the market, what your home will look like, what you should expect to get in this market. Now, ultimately, this is an opinion, right? There's no concrete answer. Nobody knows, what that buyer is willing to offer. So sometimes you may see a range of $50,000 to $100,000 swings. And for some clients, I mean, if they're buying under their value, significantly lower than what they currently are approved for, right? You could be approved for a bigger purchase price, but you're buying well below that, then you have a margin of error that if the home sells for a little bit less, you're covered, right? You don't have to really worry about that. You banked on those numbers. But let's say you're an individual where you're buying that home at the top end of your budget and you need the maximum sale price of your existing home in order to qualify for that one. You really need to take into account the variables, right? In the sense that if you buy that home at the top price point that you're qualified for, and you don't end up selling your existing home for the value that you needed, who and how are you going to come up with that shortfall? Do you have other mechanisms to support you? Do you have family? Do you have friends? Do you have additional savings, money put aside, right? You really have to take a look at those options. Oftentimes, clients will come and they'll say, look, I have a buffer. I also have the money put aside for the land transfer tax. Looking at all these things in tandem are super, super important, because these little mistakes can basically create a lot of stress for clients that are at the last minute going through the process, and they get hit with, maybe it's a new construction home and they're getting hit with additional costs, additional levies, additional actual amounts that are not aware of. Like, sometimes when you're purchasing a new construction home, and I've had my fair share of those, I understand that there is capped fees, right? But are we prepared for those capped fees? So sometimes they're not really enumerated. Sometimes you're not aware of it. So you have to really understand what those costs look like and if you have enough money in reserve to close. And this is super, super important, because a lot of times we're getting clients that are calling us, asking us for help. They were misguided, was misrepresented. Somebody completely botched those numbers, and now they're pot committed to close on this home. Sometimes they have the means to do so, sometimes they don't, and they're struggling to come up with the additional $15,000 to $20,000 that they need to close. And let's not even get involved or talk about what's happening with investors in the In the condo market, that's a completely separate conversation for another time. We're talking about individuals that are looking to own or occupy the home, purchasing their home. And, what happens with individuals that have purchased a home? Maybe it was pre construction, it's about to close, then they had expected their home to sell for X amount in order for them to make that leap. It happens more often than we'd like to think about, but ultimately we have to really plan it out. Now, with pre construction and homes that are closing, I mean, it is something that happens, and that is a risk that you're taking when you're buying a new construction home. Talk about that at another time with another episode. But for those move up buyers, those buyers looking to make that leap, understanding, is it right to sell your home first, or is it best to buy first, then sell? I mean, this is literally the question that we ask our clients. I mean, things to really consider if you're in this situation is, do you have a place that you could live? Let's say you sold your home, you have that closing happening 120 days out, the maximum amount that you can set yourself up for. Set up for more if you have a buyer that's willing to take on that closing date, right? Oftentimes that closing date can be negotiated, and it does play into your offer if the sellers are willing to accept it, right? But setting that closing date as far as possible gives you that runway to list your home, maybe get yourself prepared to sell your home, or if you have purchased the home, right, make sure that that closing date is as far out as possible, so it gives you enough time to list your home. And understanding that your backup plan, your contingency plans, do you have family and friends that could jump on, provide you with additional resources if you needed to close temporarily? All these things are super, super important. And oftentimes, as I said, we see these things happening, we pick them up because through the pre-approval process, it's not only locking in a rate and getting the mortgage amount and looking at the income, it's about understanding the situation, understanding the possible pitfalls of that particular transaction. It's not all, as we say, hugs, kisses, and fluffy bunnies. When buying a home, you need to factor in potential issues, right? Are you applying for a bridge loan? Does the lender that you're working with offer a bridge loan? Obviously, most of the major banks offer bridge loan financing, which is allowing you to transact, hold one of those homes for a couple of more days until the other transaction closes, for example. But there are some lenders in the space, especially working with some equity lenders, that may not provide you with bridge financing. So you have to be aware of that, because sometimes those closing dates don't align. And what happens if those closing dates don't align, right? You might have an offer. I've seen it happen where a client gets an offer. They wanted this specific closing date, but the buyers wanted to get a shorter closing date. Now they had to bridge for almost 30 days, 28 days. I was going to say 27 and a half, but no, 28 days. And they have to cover the cost of that bridge. And do they have the resources to do that? I mean, this is ultimately the important part of this transaction. It's not just about rate, mortgage, approval. It's about understanding everything behind it. Are you budgeting the closing costs? A lot of times, individuals do not actually really go through the whole numbers. Sometimes the agent is not going through the numbers with them properly. They're factoring the commissions, but maybe they're really not understanding what those closing costs could look like. Ultimately, legal fees. If there's a penalty, let's say you're leaving your existing lender, they're not offering you the most aggressive rate, or there's some stipulation there that with the port of the mortgage that you don't like, and you're leaving that lender or breaking that mortgage and staying with the same lender, then you need to factor all those costs in, leaving yourself a little bit of a buffer. And one simple tool that we have and you can have access to as well is in the description box below. You can download our free app. It does give you some certain calculators to help you budget accordingly, and ultimately speaking with a mortgage professional that will understand, ask the right questions, and get down to the heart of the situation, understanding what those numbers look like, will give you that added piece of value and the actual numbers that can help you go out there, buy a home, sell your home, and know that you have a buffer in there, and ultimately set you up for success. Buying a home at the highest price, obviously, if it fits the means for you and your family, and that's what you're looking for, that's all that is available, and that is what you need to purchase because that's the price of the home in that particular area. Well, ultimately, you need to understand that. Now, as I said, a lot of times we'll get comments saying, oh, why are you buying a home in this market and why are you doing this? Look, we're talking about clients that are existing, clients that are coming back, clients that are looking at doing this move. I mean, at the end of the day, the market doesn't wait for anybody. If you are in a situation where you need to move, you're relocating, whatever the case is, you don't necessarily wait it out. A lot of clients are just going through. Life doesn't stop, so they say, right? And some individuals are going to pick and choose their timing, waiting for the Bank of Canada to lower rates or fixed rates to drop. I mean, there's no real right or wrong answer. It's just a preference. But just make sure that you have your numbers, you know your ins, you know your outs, you know exactly what's left on the table. Let us know your thoughts and opinions about this episode in the comments section below. I want to hear from you, our viewers and clients. Let me know your thoughts. Don't forget to subscribe. But more importantly, we'll see you all next week.